Hello everyone. This is the pre-market report video for today, 21st March 2025 for the Indian stock market in terms of Nifty and Bank Nifty. As most of us know now, yesterday Indian market rallied for the fourth straight day and the main contributor for the rally was mainly due to the recovery of IT stocks. Almost all the IT stocks except Persistent System all increased between 1 to 2%, all thanks to Fed. As in the interest rate decision meeting, though they paused last Wednesday night, they said they will perform at least 225 basis point rate cut this year, which all we discussed in the last video. Now it seems all of that was only short-lived. If required, please pause and have a look. This is the status of the Indian ADR in US last night. I mean, both IT stocks, Infosys and Wipro, despite closing positive of 1.5% in Indian market, last night in US ADR it was down around 2.5%. So if you calculate the arbitrage difference with the dollar premium, the situation is even worse as it's showing negative arbitrage difference of up to 4%. Please note it's not a thumb rule, but there is a high possibility and probability as per ADR it's indicating we might have IT stocks crash today. Why? All because not due to Indian IT companies but because of Accenture. I mean, we discussed this multiple times. Revenue wise, globally in the IT service space, Accenture is the number one company in the world. Second, TCS, and sometimes Infosys and sometimes Cognizant comes as third. So being the market leader in the sector, Accenture words always carries the weightage. Now last night they released their quarterly results and that also beats the estimation, which all good, but they gave a very bad future guidance and for that they blamed Elon Musk as direct reason. Just for info, 8% of the Accenture revenue, otherwise near $17 billion worth of revenue, is directly coming from US government project. And Accenture said from the moment Trump sworn in as president, all those government related revenue was slowed significantly. In addition, they also said they are expecting Elon Musk Doge spending cut expects to affect all the consulting business furthermore, which in turn made the Accenture stock to fell over 7% in one single day, and in addition it crashed the Indian IT ADRs as well. So now in order to arrest the Indian IT stocks fall, investors need to know how much of the exposure in the revenue Indian IT is having in US government. If any company having less exposure, then they might not get affected much. On the other hand, the IT companies having significant exposure on the US government project will get affected. So that's the story. Accenture is making our IT stocks looks bad now. On the other hand, both the banks ADR closed positive and the arbitrage difference also indicating 0.5% positive opening. Then about US market, after the rally on Wednesday night, last night it traded mute and closed mild negative. There was no major reason as far as I know. Dow Jones closed flat, S&P 500 was down by 0.22% and Nasdaq decreased 0.33%. In case of VIX, it's roughly same as day before yesterday night, around 20. And regarding oil, US gasoline inventories have fallen for the 3 consecutive weeks and they are now the lowest since early January, which shows strong oil demand in US, hence oil price increased by 2%. At the time of this video, WTI crude trading around $68.5 per barrel and Brent crude traded around $72 per barrel. So those were the things happened yesterday and last night in the global market. Now let's look at the new India specific info. In the cash market, yesterday for the second session in a week, FI was net buyers. They net bought for 3,250 crore rupees. But now DI turned as net sellers. They net sold roughly for equal amount 3,150 crore rupees. Participant-wise open interest analysis. In the index option, due to weekly expiry, yesterday 23% of call option open interest and 26% of put option open interest either unwound or expired. So to do the proper analysis for the next week monthly expiry, we need more open interest to add either today or on Monday. Either way, let's look for the remaining 75% existing open interest. First, proprietary traders in the index option market slightly reduced their bullish position. So from over 7% net difference open interest on the bullish position on Wednesday end, now it dropped to 6.6% net bullish open interest position. 6.6% net, it's still significant bullish position, which means proprietary traders makes more money if market goes up. On the complete opposite side, it's retail traders. Before last 4 trading sessions, always retail traders open interest position was super bullish, net 7% or net 8% kind of. But the moment market started to rally, immediately I don't know why retail traders became negative. Anyway, at present they are holding 4.9% net difference open interest on the bearish position, which means they make more money if market goes down. FI wise, they inclined towards the neutral state with very slight negative bias. Moving to the index future open interest, yesterday was not the expiry for the future market. Despite that, FII unwound 5% of their short position open interest and added 9% of the new open interest on the long side. Hence, at present, FII short position open interest holding dropped to 70%. Similarly, on the opposite side, retail people reduced their long position open interest by 8% and added the short position open interest by near 3%. So, their long percentage holding dropped from 63% to down 60%. Overall, clearly retail traders wants the market down and proprietary traders wants the market to go up. In between this fight, FII was just observing and adjusting their open interest position so they can maintain their neutral stance. As a summary, global momentum and US market turned okay, neither positive nor negative, but we got this IT stock weakness. I'm not sure how much it expects to influence the Nifty on the negative side. About GIFT Nifty, early morning today it traded at 23,200, equating that with the spot market, it's indicating flat opening with mild positive bias. One more thing, just now US President signs the executive order to dismantle the US Department of Education. So far no reaction in the US future market, but it might influence some education related stocks. Moving on, yesterday as per stock open interest, Polycab, Chambal Fertilizers, Oracle Finserv, Adani Total Gas and Union Bank of India are some of the stocks that got an increase in open interest along with a negative close, indicates the short build up. On the other hand, Manappuram Finance, Sonata Computer, Torrent Power, ITC, IGL and Shree Cement are some of the stocks that got an increase in open interest with a positive price close, which means these stocks got the long build up. About the things to look out, before our market hours, Japan's consumer inflation is due to release. Then during our market hours, there is nothing that I'm aware of scheduled to release that can affect the market. And for night for US market, FOMC member speech and more oil related stats are some of the things we need to keep an eye out today. Coming to technical, Nifty opened more than 100 points gap up and increased as the day progressed, then closed at near 23,200. Thus on the daily chart, Nifty formed a long bullish candle by continuing the higher low formation for the third consecutive session. It climbed decisively above short and medium term moving averages, which is a positive sign. In addition, RSI momentum indicator increased to 63, while MACD trending higher with a positive bias, though it is still below the zero line. Hence, considering the strong momentum for the fourth consecutive session, Nifty is likely to march towards 23,400, which coincides with 100 and 200 exponential moving average. However, if it consolidates, the immediate support zone is at 23,100 to 23,000. In case of Bank Nifty, similar to Nifty, it also opened more than 200 points gap up and increased as the day progressed, then closed above 50,000 mark. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern with a minor upper and sizable lower shadow, indicating buying interest at lower level, even though there was some selling pressure at higher level. Bank Nifty entered into a healthy zone by surpassing all key moving averages by continuing higher low formation for the sixth straight session. In addition, it is trading above the Bollinger Band with RSI reaching to 64 and MACD trending higher and approaching the zero line, signaling the positive bias. Hence, the crucial support is at 49,700 level, and if Bank Nifty sustains above it, the next upside target will be at 50,600. On the options front, the maximum call option openers was at 24,000 strike, followed by 23,500 and 23,000, with maximum new call option writing at 24,000 strike, and then 23,900 and 24,100. On the put side, the maximum openers was at 23,000 strike, followed by 22,500 and 22,800, with maximum new put option writing at 23,000 strike, and then 23,200 and 23,100. Thus, from options data, Nifty might remain in the range of 23,000 to 24,000 in the short term. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.